The housing market is breaking and builders know all about it. Hi folks, my name is Ed Zoller, Villa Realty Group. I've been an agent about 25 years locally here. In today's video, we're diving into one of the most shocking stories in real estate right now. Builder confidence has collapsed to historic lows. We just broke a record in inventory regionally. Months of unsold supply is piling up, and the market is flashing a warning sign we haven't seen since 2008 crash. If you're buying, selling, investing, or trying to make sense of what's really going on behind the headlines, you'll want to watch this. Let's break down the data, let's do the numbers, and let's go over this housing market for the end of July. So inventory, we always start with inventory, supply and demand. Supply went down 6.65%. That's a positive thing. Less inventory means more towards stabilization. But as you notice here, long term, it always goes down during this month. It doesn't hit a bottom until September. And what's it do? It goes up, it goes up, it goes up. Now, when it didn't do that, COVID, horrible mess right here. We just lost. Prices went soaring through the roof and everything else. And then the inventory started going up. I want you to notice when it stopped being crazy, about right here. That's when interest rates really started soaring from the 3s to the 4s to the 5s to the 6s to the 7s. And obviously, as that happened super rapidly, our inventory started climbing. Now we're going back down. We're getting back on cycle because there was no cycle here. This is just kind of an up trend, and now we're starting to get back into this season, non-season thing. I'd love to see this kind of going up and down. What I'm concerned about is that we're peaking out at 14,000, and if all these arrows go down 3, go down 3, go down 3, if this goes down 3, we're going to be right around 11,000, 10,000 homes for sale, and then we're going to be making our way back up. So positive thing is inventory went down. We lost 800 homes. Did they sell? We'll get over that in the next slide. Our inventory is still 22% higher than it was this time last July. 64% of this inventory is single-family homes. Condos about 20%. The rest are townhomes and villas. But what was shocking to me is of this inventory, 2188 of the existing inventory are new construction. And that's a 4% increase from last month. So builders built more homes. Where did the 800 homes go? Easy. Withdrawn, expired, terminated. Some sold, some just gave up. A withdrawn is when they just take themselves from the market, but the agent still has them under contract. Expired is the agent had them under contract for 6 months or a year, and that 6 months and a year expired. And the terminated just means that they gave up, and the agent said, we're off the market. Now, they could go back on. Maybe they fired the agent and hire a new one, or maybe they want to go off and go back on again. That's a trick agents do to make the listing look good. Just know that agents like myself look at total days on market, not just the hey, I pulled it off, put it back on, it shows day 0 on Zillow, it's day 500. Who knows? They're just trying to make it look better. But either way, 1900. I mean, now that I've started graphing this since 2020, you can see our long-term average. Yeah, we always have expires, terminates, and withdrawns. But look at how many are withdrawing. This is a good thing. It's what our market needs. We got to get these overpriced, upside down, and unrealistic sellers off the market, don't we? So we can have the real sellers who do want to sell, the things that are going to equal sales, not the people who think it's 2 years ago and they can sell their home for $1 gajillion. So even though our inventory went down, it's a reason, is we lost 1,900 homes, but we only lost 800 in inventory. So that's kind of concerning. Demand. This is buyers buying homes and closing on them. You can see our long-term average. I drew a new line. Why? Because we didn't hit that line. Under 1,000. How many times have we gone under 1,000 sales? Well, one in the lowest. As you can see, every one of these bottoms is 1 year apart. It is the same month. It is January. It's our lowest sales volume. Then that really starts climbing up in February, March, and April, and then crashes right back down again. All of these lows are getting lower. All of these highs keep getting lower. I tried to draw a trend line here. All the black that I have in this graph showed you the current month, July. And what happens after July? Well, in 2021, it went up a little bit, and here it went down, and here it went up, and here it went down. And I guess you'd say, hey, follow the logic here. It's going to go up. It does have a little pop in September because school's getting back, or August, September, because kids are back in school, people get their kids off to college and all that stuff, and you're going to maybe see a little pop of sales, but sales going down 14%. That is a big number. That's 3 consecutive drops. But every single year, we usually have anywhere from 7 to 8 consecutive drops. Year over year over year, at least going back as far as I can remember, we have a season. Now, when I wrote this, it's 6.81% was the conventional 30-year fixed loan. And Last month it was 6.72. It's going to range up and down. I think if I went back 1 year, I don't think it's changed too much at all, like 0.01 or something like that. So interest rates haven't done anything. This trend, this is a negative trend here for demand. So am I hopeful that demand picks back up? Absolutely. When do I think that's going to happen? When it happened every single year before that, about January, February, demand will pick up, buyers enter the marketplace. How many homes are we going to have for sale then? 14,000, 15,000, who knows how many new constructions are still going to be there? We won't know. But this is a negative trend saying that our market is going to continue doing what it normally has done until we see some sort of reversal pattern. Our median home price, as you would expect, if interest rates go up a little bit, you would think the median home price went down, and you would be right. It went down. Now we're at $345,000. It went down 6%. 6% a month. If this continued every single month, that'd be like 70% price drop. That doesn't happen, though. This is one of our worst months of very low sales. Our inventory is going down, but not to the level that demand is going down. So it's a downward trend. This is what we want. What I did with this red line here is I took into consideration interest rates at the time, average household income, what people can afford, and came out with what the home price should have been at a certain time. And you can see here in 2000, it was on track. And in 2001, it went a little above because Florida was becoming a boomy boom town. And then we bubbled, and we built way too many homes. And then builders had to liquidate. And then our average price started crashing. And we went beyond this little train track. And then we got back on course in 2016 and on we go. Then COVID happened and we had a bigger bubble. So what's going to happen here? This is the average person with the average wage being the average home. And you know what? For how many years? Since 2008 all the way to 2021, that was a true statement. The person making the average wage could afford, the home prices were under that, and at one point they were at that price. But when they go above, and our average home price went to $400,000, what I foresee is that we are going to be hitting a 250 mark, but just like it did here, overcorrecting itself and coming back up. Now, this isn't a super accurate graph. We only had 999 sales. We had 54 sales over $1 million. Even a $4.1 million home in Magnolia Point in Fort Myers sold. That's the most expensive one that sold in Lee County for July. But those kind of sway these median home prices a little bit. But we also had some garbage foreclosures, which brings down the median price. So as long as you're consistent, you can see a trend. And that's what these graphs are here for, is to show you a trend. We know that was a bubble. What is this? I say that's a bubble too. Everyone was so scared of calling it a bubble a few years ago. But where do I think the median home price should sit? $264,600. That's what this graph said. This is based on household income and where the home price should be for the average person to buy the average home. So interesting to see what's going to happen. We're going to want to see this kingdom down. I'm really curious when we hit 264, what's it going to do? Is it going to go past it, or is it going to stabilize and hit a train track? And maybe that happens. We don't know. That's for the future, and it's not happening this year. My most important graph in this entire update is affordability. Why does house prices move? People make more money, can afford more, houses go up, but you get the idea. And since 2009, all the way to 2022, the average person, take the average wage of the county, and you find out what the mortgages are, and you would say to yourself, people can afford 20 to 24% of their gross income. If I make $5,000 a month, and I want to pay up to 24%, then I should have a mortgage of about $1,200. And that would be what I can afford. Could I afford making $5,000 a month? Could I afford $2,500 a month? No, because I'm not bringing home $5,000 a month. If I'm only making 50 or 60 grand a year, I'm not bringing home all that money. It's being taxed. I got bills, all that good stuff. So when you hit these 50s and 40s, that's not sustainable. That is not affordable, and neither was during COVID. We went up to 48% of someone's household income going towards a mortgage. That is not sustainable. What I like about this, though, is I can actually predict what our mortgages should be. $1,727 a month is affordable as of right now, as long as the household income is bringing in $74,026, as I got from the Census Bureau here. It did go down, so this is good, but this arrow here, I haven't moved it. It needs to go under this arrow, and I'm going to keep this arrow the same size so we can see if this graph is going into the arrow or if it's just kind of hovering above it. But this needs to be under this line. And there's only a couple of times it's ever been above this line. When we went up and and then it hovered under that line, just because we had these huge, crazy markets, which is the 2006 bubble, and then what happened during COVID, doesn't mean that this is truly the average what people can afford. We are right now the average home at $345,000, even though it went down that amount of money, is $23.29 a month. Not affordable. It is 34% overinflated. And that does not mean that the prices go down 34%. That means the monthly payment needs to go down 34% for us to say that we are affordable. The home value growth, this comes right from the Zillow Home Value Index. And what I'm looking for is a trend here. When you have a trend of going up past zero here, this is how much the home value has gone up per month. So at one point during 2006 boom, houses are going up 3% a month. Times 12, that's 36% a year. And it kind of hovered up there very shortly, and then it plummeted back down. And then it started losing up to negative 3% a month until it hit about 2010, 2011. It tried to, kind of in the stock market, they call this, it met resistance and kind of back tested and hit resistance and found support and all that stuff. Once it stabilized in 2012, that's where it started stabilizing. And 2012 would have been the year to say, our market is stabilized, feel free to buy homes. What are we doing right now? Look at the double peak of COVID here, that we not only did we hit above what we'd happened in 06 as far as affordability goes, or stabilization, we hit it twice. Then it's on this downward trend right now. I look at the continuous months. This back here, 59 consecutive months. Right now, we're at 24 consecutive months. But look at the previous months. We're at negative 1.2% a month. Last month, 1.22. Month before that, 1.04. It is continuously going down. To see any kind of form of reversal pattern, I'm going to want to see this go towards zero. If it's getting further from zero, that's not showing that we're stabilized. And so then I would say we're unaffordable, we're unstabilized. What do you think is going to happen in the next couple months? Let's look at the month-to-month thing. Housing units for sale. Yep, we went down 6%, but our solds went down 14%. That's pretty rough. You don't want to see solds double-digit plus of what the change of inventory is. The pendings, this is next month's sales. Now, when we had 1,509 pending sales, it went down 7% from the previous month. And what did that 1,500 pending sales turn into? 999 solds. So not every house that goes under contract closes. So if we have a 7% drop in pendings, what do you think the solds are going to be? What do you think is going to be over on this line for next month when this one says September 1st? It's probably going to be lower. We'll see. We'll see if all these predictions come accurate. But so far this whole year, every single month, they've been accurate. New constructions, this is very concerning to me. We have more new constructions for sale in Lee County, a 3% increase than we had last month. So much for all those incentives that they were giving. I will tell you as an agent, though, beginning in July, the incentives got throttled back. Almost every builder who was offering these crazy, crazy incentives that you saw my clients taking the last couple months, they pulled them all back. But at the end of this month, they kind of put them back in again. Average time on market went up a day. That's not a big deal. The median asking price going down 4% and the selling price going down 4%. The asking price to sold is interesting. It went up a lot. That's because I think we're getting rid of all of these people who think their house is worth a fortune with all these expireds and terminateds. And now real people who want to sell their home will have to drop their price until they get activity. I am selling my listings more for full price now than I was a couple of years ago because people are pricing themselves with the market, if not maybe a little ahead of the market, so that the market doesn't get away from us. But we're not affordable, we're not stable, and these numbers here show that next month, especially with that drop in pendings, that we're probably going to have lower sales next month. Our price cuts, probably going to do away with this graph. I mean, we're at 26.8. We're almost at our long-term average, which is great. I do want to see kind of these peaks and valleys. I always do all my graphs that you've ever seen me do in any of these market updates I've done. But I think what pertains to a certain month, I'll always do supply, demand, and price, of course. But this one, we're hovering right on average right now. Tampa, 39%. They're leading the country right now. There's parts of Florida that are worse off than we are. Of course, we were worse off than them. So it's just like a train. Like we're in the front of the train and they're the compartment behind the train. If we're going down, then they go down and everyone else follows. Last time we crashed in 06, I think the caboose of the train was like Jersey. But they went down too. But they went down last. This is what I'm talking about with this video. Builders are in panic mode. And why is that? If I would have asked you, when have builders had the most inventory? You would have said the 2006 crisis, and you'd be right. It broke a record by far. The highest we had was like 1985, or during the times we had that huge 18% interest rate during the recession. Look at how many homes they built. And then we like almost, I mean, doesn't not double, but from 170 to 291,000, of course we overbuilt. We overbuilt homes, builders got panicked, and they dropped their prices, and we crashed. Look at this, 312,000. This is new constructions in the South Census region, all southern states. We have more homes than now, right now, than we ever had. So this is something that I think you're going to put pieces together here of what are people going to do? What are sellers going to do? What's the used market going to do? What are builders going to do? Builders are going to have to step up because they got way too much inventory in the South. Matter of fact, months of supply in the country, this is the United States, I'm not even talking about the South, we're at 9.8 standing months of inventory. It's going to take 9 months if the builders build no more homes. It's going to take 9.8 months to get rid of the homes that they have. And I thought I highlight a couple things here. There is only a few times in our history that we have been in the 9 going to 10 range. And look at this, the 1973 recession. The double dip 80-81, they had over 11 months of inventory. The 2006 crisis where they had 12 plus months of inventory. And right during COVID lockdowns, they had a ton of inventory, and they have built it right back up worth of months of inventory. So the market, when people say the market's turning around the minute Powell cuts rates, I really don't think so. That's a lot of homes to get rid of. Builders have to do something extra special to get a buyer to even want to buy in this market. We're going to talk about that in a few slides. The NAHB, the National Association of Home Builders, they put out a survey every single month. And I thought this last couple months was interesting. I'm actually putting the graph on here. It is one of the largest trade groups in the country representing home builders, developers, and other construction professionals. And when they come back to say on a scale from 0 to 100, what is your confidence that this market is doing well? How confident do they feel about this market? That's buyer traffic, current sales, expectations for the next 6 months, future growth, everything else. And going back all the way to 1985, you can see here, anytime it's been between 20 and 35, it has only happened 1, 2, 3, 4, 5 times. It happened back in the 1990 when they had a regional housing market recession. Obviously, the financial crisis of 06, 07 during 8 to 13, it was very, very low. Then you had 2020 right during the lockdowns, and then a brief dip in the 2022 when interest rates went up, and right now. So what is right now? Like, we can say what all those years, what happened. What's right now? A 33 out of 100. And I saw an article this month that came out that said home builder sentiment increasing. And I'm like, increase from what? From 32. So from 32 to 33. I guess fire off the fireworks and celebrate. Get out birthday cakes. It went up 1.1% more people think it's a good market. 33 out of 100. Anytime it's below 50, that is negative sentiments. This is fear. Anytime it's under 40, this is fear. And anytime it's above 50 means that builders feel real good about it. This is the warning signal. This isn't just a blip. I think it's a warning signal about what the builders are thinking right now. And when you understand that builders have to sell homes and they're not feeling very confident and they have record amount of inventory, what's a builder to do? Let's take a look. How are they going to incite demand? So what I did was, when they have this excessive inventory and low sentiment in the past, what they've done is they've drove the market down. They bring a house price. They do it slowly. They don't just all of a sudden drop $70,000 off the price and let's get to the bottom quickly and just stabilize. No, won't do that. We're going to try to milk out all the money and margins we can. But they're going to try to keep prices elevated, but they do a lot of tricks. I have taken, for Southwest Florida, our top builders down here, Century Complete, D.R. Horton, Lennar, Pulte, Holiday Builders, Adams Homes, and Christopher Allen Homes. And I have listed July's incentives. These change every month. Sometimes they change every week. But right now, when I built this was their current incentives. Price reductions, interest rate incentives, closing costs, commission. Now, to me, this is the worst. This is the worst one. Commission to the buyer's agent or the agent, real estate agent, means nothing to you as a buyer. And just remember, I'm saying that I'm a real estate agent. What they're paying or bribing us to do should not make one impact upon you. What you want to see is reductions in price and interest rate incentive, making the price affordable and helping you with your closing costs. And look at who's doing all three of them. Horton is doing all three of them. Matter of fact, they have the best interest rate incentive right now at 3.99% FHA. Lennar, they're doing all three of them. Pulte, they're doing all three of them. You know what? I give them A's for that. Holiday builders, 2 out of 3. It's not a Meatloaf song. 2 out of 3 ain't bad. No, they're not even reducing their price. They're at 4.99, not quite the best, but overall decent, right in the middle. And they are doing closing costs. They're trying to give a bonus where I would say, why don't you put the $3,000 in the price reduction and quit about the agent? Agent's getting 3%. It's completely fine. It's not like I'm not going to sell someone a home because they're paying me less. It has nothing to do with me, so I give them a B minus. Adams Homes, they're doing all three. Give them an A minus. Why am I not A plusing them? Because their interest rate's not as great as Horton's, but they are paying. When I say all closing costs, that just means they're paying up to 6% of the contract price. $300,000 home, they're giving 18 grand. It's a lot of money, and most of all these will pay all the closing costs. Christopher Allen, they're a 2 out of 3 ain't bad. So I gave them a C because a little bit of price reductions. It's the interest rate that means everything. If you're not doing an interest rate incentive, you are missing out, and you're going to be missing out on all these buyers. So I thought this was interesting. Take a look at this, pause the video, and take a look at how I rank them. How would you rank them? I'd love to see in the comments if you would give someone else something else. Let me show you the latest deal, and I just did this deal this month. This is to show you. This is how the used market. This is just to prove to you one thing, how way out of whack the used market is. This is a townhome, a brand new 2025 townhome in Cape Coral, 1,816 square foot, 3-bedroom, 2.5 bath, but brand spanking new. Built by Pulte. They gave us a 5.25% interest rate, a $247,990 purchase price, and they gave us 15 grand at closing, which paid all the closing costs. Now, I did a search. Show me every townhome within a quarter mile of this, and it pulled up Bella Vita. It is right next door to Coral Lakes. Right next door. Same road, like right off the same road. It's right there. It's a little bigger, but it's a 2006 built. That means it is 19 years old. Look at what someone just paid in May. $329,000. I looked in the MLS. They didn't give them any concessions to closing costs. Nothing. It was zero. So let's do some math, because you guys love math. I do the math. You don't have to. Just listen up. This used product that sold for that price, 2006, for $329. The interest rates are FHA, 20% down conventional is 6.75. So I did 20% down conventional. They would have had to come out of pocket their closing costs and their down payment, $74,300. Principal, interest, taxes, insurance without the HOA is $2,240 a month. Let's talk about the Pulte we just got at $247,990 with the 5.25% interest rate, and they're paying all the closing costs. My people only have to put $49,598 down, including all their closing costs, and their principal, interest, taxes, insurance without HOA is $1,586. That's $25,000 less down and $654 less per month. If I were to take that used home and make it $1,586 a month, I would have had to drop the loan price $93,000, a reduction of 28%. See how you can, is it starting to sink in? How can I get the prices to come down 30%? Well, you can do it with incentives and interest rates. So let's just do an overview. So do you guys understand that math? Do you want to pause the video or something like that? So in essence, I got this brand new place for much cheaper, $93,000 off that price pretty much in monthly payment. All right, so end of July, we decreased in inventory. More than 1,900 homes got pulled from the market. Third straight month, our inventories dropped. Our pending sales dropped 7%, which means next month's sales should be about 7% less. Sales dropped 7%, making it the worst July in 40 years. I've been saying that about every month since January was the worst January in 40 years. Median home price went down as it should. New construction, and just putting all this together, new construction inventory is piling up. They have to build homes. They have to sell homes. They have to do this. They have to give incentives. And if a builder decides to throttle back that month, then we don't look at them. We wait till they get incentivized. They will. They do not want to own a home any longer than a day. The home value growth is still under stabilization. We haven't really changed in what the thesis has been this whole entire year. I don't see any sign, and even from the builder's sentiment alone, that this market is going to have any kind of reversal pattern, in my opinion, for the rest of the year. we're going to have some sort of stimulus or something to happen for this to happen here. Advice to buyers. If this wasn't a perfect example of patience, of being patient, could I have gotten that townhome from Pulte 2 months ago, 5 months ago, 8 months ago? No. I got it now. Also, let you know, they're like selling out of those. They only have like 5 or 6 left as of time I'm recording this. 11,000 homes is still a huge pile of inventory, but I just thought it was funny, the piles of new constructions, not just regionally here, not just locally. I mean, I'm talking southern states. I know a lot of those are in Austin, Texas. A lot of those are in Tennessee and Georgia. But man, 12,000 homes that they have to sell through, 9.8 months of inventory. You know, I still believe that locally here, we've already dropped about 22%. Our home prices are 17% overvalued. So instead of waiting for $350 to go down to $287, you can get that monthly payment now. Matter of fact, I just got from $320 down 90 grand. I mean, I got that townhome in essence for the same as $230 with today's interest rate. So you don't have to wait. Like any of my buyers, I'll tell them, patience, let's have a plan, let's formulate a plan. Let's make sure your credit's in check, make sure you have your down payment ready, or if you need down payment assistance, go over that. And then we go out hunting. And once I find what you love, Ed, I like this builder's model X, and I like this builder's model Y, and whoever wants to come to the closing table and come to me will get the deal. And we wait, and then they will. Advice for sellers? Yeah, I mean, we are going into full crash mode. We really are. The listings I have left, I am having people drop their price because when we have no activity and low sales, waiting isn't the answer. Waiting is just going to wait for us to bottom, correct, stabilize. And how many years is that going to take? How many months is that going to take? Could it be 36 months, 48 months? We don't know. We don't know. I only know right now is there's nothing to say it's going to be next month or this year at all. Open houses are working because people go on, they're going on like Zillow and the other one, Redfin, and they'll see the open house there. People are here. They're not here right now, but they're here in September after the kids have gone off to school and after the people put their kids into college and they're coming down to downsize to Florida. All those reasons you come to Florida, which we just had like 16 laws that just got enacted that actually make Florida kind of cool. We're actually talking about doing away with property taxes for homestead exemptions. All you people in New York, how much you pay in property taxes? Come down to Florida, you've got no state income tax and you got no property tax in your homestead. That would be amazing. That's a catalyst that will drive our market, bring everybody back into Florida again. But that's not happened yet. But we do have 16 new laws. You can look up what they are. There's videos all over the place about that. But sellers, stay ahead of this market. If our market went down 1%, you go down 2%. If the market goes down 2%, you go down 3%. If you stay ahead of the market, you will get out of this market. You will get out from under it, and you'll be happy you did. Everyone who sold with me, including my client Monty, who just got rid of his house, thank God he got rid of it because it's already worth less. The data I get, obviously, a lot of this was Census Bureau for this month, Fred as well. Zillow, Realtor.com, obviously our local board of realtors, Bureau of Labor Statistics, all this. I take all of this data and I get it all from these sources. So if you ever want to fact check me or find out what data I get from, I take the graphs straight from them. And then if you guys have any questions, you feel free to give me a call. This is my cell phone number. This is my email address. The website, if you're a buyer, as well as says teachers can buy homes, fill in the blank. I'm an electrician. Electricians can buy homes. This is a program I designed to help teachers first, but anyone who's looking into buying a home. We credit repair for free. We make sure we come up with a plan for the down payment. We find the right lenders. We find the right inspectors. We make sure that this is done foolproof, and we have a plan. And then Lee County Market Update, you'll see every one of these PowerPoints and every one of these videos for the last couple of years. And I will say this, go on there, scroll all the way to the bottom, and you'll see my prediction from 2022. A PowerPoint I wrote back when we were booming that said, guys, this smells a lot like '06. I hate being right, but man, I was correct when I smelt like '06 when we're in 2022. But guys, thank you very much for watching. I'll talk to you later. Bye-bye.